Good morning, good afternoon, and good evening, wherever you are joining me, and welcome to the 24th edition of Investdata Academy Live with Ambrose, where we bring you technically proven strategies and trade ideas and tips to guide you in your investment decision, and also help you to manage your portfolio, giving you tips on how you can at any given time, whether in down market and up market, for you to maximize what is happening in the market to your own advantage. Because when you combine your technical and your fundamental in any market environment, you stay ahead of the market, and that is why this platform is mainly for education and take time to share investment tips and trade ideas that will help you to stay ahead of the market. As the things are going now, really, this is the time to marry your stop loss. Marry your stop loss. I say marry, when I mean marry it, it has to be with you at all times, especially when you are trading, whether in the day, in the night, after end of the day market you are using chart or live chart you are using, you need to look at your stop loss. It's very, very key. As the conflict or crisis in the Eastern Europe deepen or continue to drag, it means a significant risk to every trader or investor in the market, no matter what you are trading. Whether you are trading futures, stocks, commodity, I'm telling you, this volatility is not smiling, and for that you have to be active. Don't joke with your what? With your stop loss. Don't joke with your stop loss. Execute your plan trade or your trade plan. Anyone you have, your trade plan or your but you need to have a plan, and that plan you need to execute it. That is how you can stay ahead of the market. We are as I said earlier, that in this class that by the coming months we're having a program. Like I said, we are going to help you make more money with less risk in this volatile and unstable market. At come April 2nd masterclass, so you can take your trading or your trading or investing position or style or portfolio to the next one, to the next level. I'm telling you, that platform that day will be where you can really get the tips, and also not only the tips, you are getting the stuff to buy. Not only that, these experts are going to share their own trading strategies, and also area they see that you can play defensive and still make, right? I said, with less risk, because we're going to guide you. This market is volatile and unstable, but despite that, there's opportunity for you to make more money. The way it's going now, you don't know when this war between Russia and Ukraine will come down or will come an end. But I believe that despite what is happening, it's for you to look at your portfolio and see how you can take advantage of what is happening, which sector of the economy, which sector, or which stocks that can this trend that is happening or what is happening globally can influence their performance. At the same time, which area that they are going to suffer most. You need to. That's why I say portfolio reshuffling or what we call sectorial rotation will continue, because you need to stay ahead of the market. You need to also protect your capital, because capital is king. That's why I said anywhere in the world, when you are trading, you don't joke with your word, you don't joke with your stop loss, you don't joke with what you use to make money. But that is the only way you can stay ahead of the market. Once you can protect yourself, that will give you an edge, to whatever that is happening in the market. Today is the last trading day of the week. We all know that. I see how the market have oscillated within this week. We have seen down to market this week, and the two up market today as we speak. Markets already kind of looking down, but most international market also, or global market, are kind of having a breakout from their previous day lost position. You can see that this oscillation will continue, and when there's oscillation like this, I will tell you that when you see an up market, you have made profit, you sell into an up market. When you see a down trend, that there's opportunity for a bank to buy into it. That's why you need to balance all you are doing at this season, because that is the only way, and I believe that is the only way you can navigate this market. Because if you want to really stay out of the market, like I tell you, the technical tools I've always been explaining here or using here, you should also master them to help you to stay ahead of the market. That's why you share technically proven strategies and what trade ideas or tips that will help you to navigate the market. And especially comes April 2nd, it's purely for us to sit, anywhere in the world. I'm happy that people are already, and outside the situation of Nigeria are already paying just to participate, because they know that despite the volatility trend we're having globally, there's still opportunity in our local market where they can take advantage of what is happening, especially as we are looking forward to more earnings to hit the market. Yes, you say the word that it will hit market. How has market reacted with it? And don't forget that I've been saying on it that you don't expect that because earnings coming, price will move like more 30% up again. No, don't expect that people that have entered early in the market before this result, they are already in profit. When results come, they make additional 10% or 5 or even 8 probably they're ready to sell. And that's why I say market is not reacting as expected to this earnings. But these earnings, I'll tell you, they are pretty good, fantastic, pretty good for anyone to see, any market to see this kind of number. It's worth the number. That's why support the price. That's why I said what we are seeing, there's no panic unless or this crisis lingered for too long before we can see. But we can see that even the local managers and the economic managers are also looking at how can we look inward and make sure that what we have to support the economy, because what is happening globally is going to influence every facet of different economy, especially Africa that depend more on importation, especially our country. Fuel price, as it's going on internationally, also fuel price here is likely to go up. That will impact inflation. Not only that, we know that commodity prices are high already. We know that the manufacturers that need most of these raw materials for their production, if they are importing, the cost the high cost they are bringing it in, it's going to also affect their bottom line. That's why if they say they will continue to work on sector acquisition, you should know the sector that will not be hit with all this happening globally. How can you know them? That is why it's part of what we're going to share in the coming seminar so that you can have an idea. You see what is happening in the oil sector. You don't need to be told that you can see nearly all the market, oil and energy stocks are looking up on that regard because they see. And also, there are other sectors that are going to benefit from this that have related business. Now, if you know, and that also should guide us on how to take our investment decision. For me, the market is still our local market is still very strong. As far despite its kind of pull back today, but you know why as we go to give you the state of the market. But I tell you, our market is still very strong as far it's trading above the 47,000 index. I always think that once you break it out, I'll tell you market can enter a decline phase. As we speak now, market is still in distribution phase. They are trying to come up and down, like trading for if I tell you from February, around 70, almost to date, you can see that market have been in a consolidation mode. Then not going up or breaking down. That tells you that market is looking for a trigger. If possible, there's another position that will come that pull market to the northward. That means we're looking at around the 48,000 mark again. But anything that is negative might also put the market down. I want to be looking around there, although around the 45 or so, 44, before we can see the market rebounding again. But all depends on what of market forces and force of market forces and sentiment that between now and the end of the month. At the same time, don't forget that as for the month of April, we've seen first quarter, and also all those companies that has March as year end. As from April, we want to be seeing their unaudited account for their financial year ended from March. That tells you that we still have kind of extended the earnings season to the month of April. That's why our eyes will be in the market to see where the trend or where the wave is going. For me, the market is really, really not doing badly, but don't be greedy. Once you make profit, those income investors, they determine to target those stocks that have suffered a kind of pullback and you're still expecting dividends from them. You can still buy so that you can get more, meaning that will bring also more return in terms of dividend income from you. Yes, at this hour, I want to go to the technical aspect of our discussion where we'll be looking at the chart. But before we start analyzing this chart or this trend, or as you can see, we want to look at the state of the market as we speak now. I'll tell you the market is already in red, pulling back. I'll tell you market as we speak now. And see today, I think the market has touched even as high as 47,363.98. Then low as 47,234.91. Tells you that market is still oscillating, selling below what it closed yesterday, trending below what it closed. What it closed yesterday. But the good thing is that market is pullback, and I'll tell you the factor that also responsible for this pullback as we go into telling you the state of the market at this hour. As we speak now, this is almost at noon. Market is updated from morning to this hour. We're still expecting those afternoon traders, which I already tell you between now and 2:30. But as we speak now, we're having 14 decliners in the market, having 7 advancers. That means already we're having a negative market breadth as we speak at this hour. And I'll tell you the The top losers at this hour are Cornerstone, Ella Lake, agriculture sector, then mutual benefits and the liquid assurance and Owando. These are the top losers. But other strong names among the losing position are MTN, Access Bank, Union Bank of Nigeria, and the Fidelity. These are the ones. This is the weight that really put the market, especially MTN, being one of the highly priced stocks. Losing this morning after it again about 2 naira, 3 naira yesterday. Today also losing what it gained yesterday. That's why the market is in the red. It's possible that before the market close, we might see other high cap stock coming on to balance the market. But as we speak, we're having more decliners than advancers. But on the advancer side, out of the 7 advancers, the top ones there are Niger Insurance, R2B School, Honeywell, UPDC, and what and NEM Insurance. These are the ones. But in terms of top trade in volume, it is very important too, because volume also there is where the market is going. We're seeing that chart that is led by UBA, Zenith Bank, Access, Sterling Bank, and Fidelity. This is the state of the market as we speak now. Tells you that these are the stocks that are dominating in terms of volume. If you look at volume, I tell you volume gives you a lot of information. Yesterday we saw a spike in the volume of Owando with the price being tells you something. But this morning we're seeing Owando that does spike up yesterday in terms of volume and price. It's also on the loser chart. That tells that in this market there's volatility. And when there's volatile market, you have to be very careful. Don't be carried away. Always allow your stop loss to guide you and set your entry and exit strategy with your profit target. And anytime you hit your profit target, don't mind where the stock is going, exit. It is for your own safety to protect your capital and also to cash out your gain. Because most times investors will see their or traders will see their gain going up before they close their eye because they didn't take action at the right time. All those gains will buy by what when the market turns against them. That is why you need to always look at the market and balance your position to know exactly where you are and don't be carried away with paper profit. Until you sell, you say a paper profit until you convert into say property. That is where you can smile and that is how to go when it comes to trading. Yes, before then we call it a day for today. Want to go straight to our charts. We want to look at this chart. Yes, I try to leave this line so that you can see the oscillation I'm saying. You can see it here now. You can see that yesterday market was or this morning. You can see that market is looking down here, looking down with a low, very very low volume of around the 40, around the 67.90 million shares traded so far. Or at this hour you can see they looking down here marginally. As we speak now, market is looking around the 47,241.11. That's what the market is saying at this hour. But now, quick one, we want to change this to a candlestick for us to get a good picture of what is happening. And this good picture, I want to see if you can follow me here. If you look at this candlestick here, we have seen this an uptrend, we agree, but you can see from here to this point, this all called consolidation part from here down, here. It has not broken down this line and put it stronger for 10,004. That is strong support level now. The market is really looking at it has not broken. Once it broken it out before we can now what it broke down before we can now say or break down that or we can now say yes, market is on a distribution on a decline stage. As we speak now, market is still on a distribution stage. You can see that it's still kind of sustainable but within a consolidation move up and down within a small space. The band here or the rectangle here is very very small for me. Now you can see that the last one you are seeing candlestick you are seeing, you can see it's already red. Say that yesterday you can see the two green here red. That market is not smiling this hour. It's possible that to turn before the market but being Friday we have seen a mixed market. Don't see but for me there's no need for panicking at this point because we are seeing that factors that have kept the market where it is are still very, very important, and which is the earning season. And don't forget that by next week, also be looking forward to see the consumer price index for the month of February, and that also look at the what we call the purchasing manager index for the month of March, March, and towards the end of March. Also, don't forget this also month we're also looking at to see the outcome of looking forward to see the MPC meeting. And for what is going globally now, you can see that don't expect any increment now. It's going to go to watch because the way it's going, spike in oil prices will be a kind of a trigger inflation. But still, I think our MPC members also want to wait and see how things play out. So if this conflict in Russia and Ukraine linger, I think there will need for adjustment, but cannot be in this common match room. But we need to also watch the trend. And this, I love a quick one. Let me bring out all our all our indicators that we use to look at the market at any time. The Bollinger Band, yes, it's there. You can see it where it's giving you, that picture alone. Like I said, like in technical analysis, you don't cram, you look at the trend and know where it's going. The picture of Bollinger Band are also giving you an insight already what is happening and what you should expect. If there's a breakout, a breakdown, what to trigger it, what we're looking at. Like I said, we trade news and rumor, but the best way is to look at your chart. Chart will always present that news and the rumor. It will show. You can see what happened in Presco recently. When the news came to the market, you can see how the market reacted to it. That tells that as you trade this news and news and rumor, it has to be on the chart. Chart will give you direction. That's why any chartist want to ask what is happening. But when you see the movement of the candlestick, to trigger you to ask question, what is happening here? Once you're able to know that, that is a way to also trade. Here you can see on a day chart. Let's quickly go back to an hour chart. An hour chart is good here. Our chart, yes, an hour chart. You can see that the market on our chart has broken down the T line. The T line is below below the candlestick. I mean, it's below the T line. Tells you that that is a kind of a confirmation that yes, on the hourly chart, market is trying to pull back again because it has broken also the T line as to speak, but still resting on the 20 days moving average. It has broken the T line, also this line. Also, if you look at here on our chart, you can see that the blue chart trying to trying to cross the red one down. It's a sign also for that market is trying to look down, like what you saw here with the candle with the index action. That's what is present here, and also your money flow is also flat at this point in our chart. Funds has not entered the market to push it up or down. You can see what we are seeing is just about selling. You can see that we have more seller. You can see this stage that fund this money flow on our chart is a flat one, but we'll go to 1 day chart to give us a clear picture of that, and can equally look at the 1 week, because today is already Friday, for us to know exactly what how 1 week chart will look like. You can see here on a day chart, you can see that the market is looking down. I can't see it here, but while here you can see that momentum has reduced drastically, waiting for a trigger. You can see this Bollinger Band widen here, but here you can see whenever it widens, break out here, expand, come here, expand. You can see the same thing that happened here is what's happening here until there's a major word breakout, either up, and no, we're having a 2 earnings season ahead now. We're already in the full year earnings season. First quarter earnings season was coming. That's why I say we're going to have a prolonged earnings season here around April. But let's watch the market. As the market is kind of trading here, trying to go up and down, but still on the consolidation move. A breakout might come when there's a positive news or an information on any policy to change the trend up or down. But as to speak now, all eyes are on the market, but the market is not doing badly. I say a quickly one. Let's look at what the market look like in a week, 1 week chart. Let's see what the market look like. Let's look at the Bollinger Band. Actually that this blue one is the T line. You can see that there's distance between the index action and the T line on a weekly basis. You can see it here. The market is this line trading here. You can see it here, but above what the T line and above the 20 days moving average. You can see a big volume here, and you can see also that it's not looking too friendly. The MACD here is also trying to come down, and the MACD has been bullish on a week, but you can see that as the markets are trend here, it's already a divergence between here and here. You can see that the index and the MACD indicator are having divergence already. It's trending here while it's already declining. If you look at your histogram here, you can see that it's declining down, and money flow, as you see, it's already looking down on a weekly chart. But for me, that is not a bad way to look at the market now, but market has potential on a weekly chart. But that's why daily chart will give you quick information to make a good turn. Here, want to look at the one that is gaining here. We have a life insurance, we have a arrow to be slow, but we want to look at the Honeywell that that is among the gainers that we see that has a lot to do with what is happening, but still the stock is showing resilient, still looking up. For me, it's a thing that I want to watch, and you know that this stock also has March at year end, and by end of this month, we're expecting them to release their audited account in the month of April and other March accounts. For me, let's look at this, what is happening in Honeywell at this hour. Let's look at what is happening there. Is there a thing that should go accumulate? And all the process that is going on in terms of their talk with the flour mill, where are they headed to? When are they concluding? Is it very soon? Is it tomorrow? Is it next tomorrow? Is it next week? That you know what to do as an investor. You know that such information, once you hit the market, and they're likely to do what? An up run on the price of the stock. That's why you need to take advantage of seeing this price trying to resist the decline, because the pattern the stock have formed recently is that whenever you can see a double button here, you can see a double button here. When I change this one to candle, you can see here. Whenever I touch this price, it rebounded, it done it here, it rebounded. You want to see if you break out this resistance level here, you point a touch before coming down. That'll be very nice. Let me change this one to what? To candlestick, so that you can see what I mean by double. You can see on a touch here, when a touch again time, it turn up again, and that is what is you are seeing already, looking up, and after forming a double top, it's a sign. But once you break out this percent, 395, 395, 96, I mean, you might see the stock going as far as hitting testing this another that can see the strong resistance level here. One, two, that is called triple top here. You can see it here, hit here. When it touches here, that pullback is a good one for the stock. But let's bring our indicators to look at what is happening in Honeywell. You can see, let's see what's happening in Honeywell. Yeah, I can see already. You can see the polygon band. The polygon band is widening. Activities is still in that stock. Volume is still coming out gradually. But once the market is expecting something, the price is likely to remain in the uptrend. And if you are in that stock, this is the time not to panic out, but rather hold your position and also look at what is flowing around, because information and rumor is what drives stocks. But most times, if you have the right information, you stay ahead of the market. And also, don't forget that your chart will always tell you something is going on somewhere. Once you're able to know that something is going on somewhere, you can always take advantage of the information to also stay ahead of the market. Yes, you can see that on Honeywell, you can see that the T line, the price action of Honeywell is above T line, and the above T line and the 20 days moving average, which is good. If you come down here, you can see that the volume is very small. But we're looking at the MACD, and MACD is crossing from down, which is a good one. And you can see here that it has been bearish before, but turning a bit bullish. But here you can see that the divergence between the index and the money flow. Index, price action is looking up while the money flow is looking down. When around 2027, which is okay, but it's looking down on a day chart. Let's see how it goes. But MACD is looking positive. In the price action is looking positive, but the divergence between the price action and what our money flow index as we speak at this hour. You have to also watch. But for me, the stock is strong. You can see that it has formed a double top, double bottom here before taking this uptrend. You have to watch this trend that is forming here. Don't know how long this trend will go, but I've shown you another triple top. And see a breakout of this tops or resistance level will be a strong continuation of a new trend for the stock. For me, it's not a bad one as we speak now. Let's quickly look at also Arrow to see, because that stock refused to go down after it pulled back and rebounded quickly. Well, it does also give you an idea of where the company is going. When you see that kind of thing in the stock, it gives you kind of where the stock where it's going. Once you're able to notice that and you go in that direction, it's also what to look at, especially if a technician that we are not looking at fundamental, but we are looking at sentiment and the behavioral pattern of people in the stock. And you can see that the behavioral pattern or sentiment for the stock has also keep getting stronger on a daily basis after pulling back. I see for the past 2 days now, after pulling back, it has keep an uptrend, which is nice. That's why we want to look at the chart to see where it's going. If it's time for you also to take profit, like all the people that don't be greedy. Once you have made 20% in a position, highest 25, 30, fine. Just exit your position. Don't be greedy, especially in a volatile market as we are now. You need to be very, very careful. Don't just because you want to make money, and now the little one you are seeing will just disappear from your portfolio because you didn't take action. You have been greedy. You can see what happened here. After this rally, it came down, refused to go below around the 57, 58. Now take an uptrend again. It's been almost 73 kobo now. You need to know what is happening, and that is why I need to call the chart up. You can see for yourself. You can see a stock that has trend for many years or how many months before you take an uptrend. Got as high as almost 1 naira something before pulling back now. But now you can see at this point, resisted decline came before now had this engulfing. I see that the breakout was seen 30 days uptrend now from around 60, around 50 something naira to almost 73. That's also getting to almost that 20%. Don't be greedy at this point. You are good to go, especially if you enter around that 50, 59, 50, 59, 60 kobo. You are good to take your profit, and it's good. Let's quickly look at the other gens before we can go to Niger Insurance. That will be the last we'll look at. You can see that there's a widening activities here. Momentum is high there. You can see it. You can see that even momentum is high as it goes. You can see where it's going. It's already trading above the 20 days moving average that within the political band. Let's call our MACD and our money flow index because you need to know where fund is going. Is fund leaving the stock or from entering the stock? That's why money flow is very, very important. You can look at this chart now. You can see that even when the stock is going up, just like what we saw in Honeywell, you can see here the stock is trading off for almost 3 days, but money flow is still good. That's a divergent, and when it's a divergent, it's also a sign that one should look out for, and that sign is very, very important. You can see that it's divergent, but here too, you can see that there is already a kind of what will I call it now? Kind of positive trend here for MACD after all this long one is reducing, and which you can sense here in our trend here. You can see that the blue line is already looking up. If you cause it to support this trend, and that is why this divergence between these two now is what what to look at. But I told you divergence also give you an insight that something is about to happen. Either you can see this money flow looking in the direction before you don't continue to go in the uptrend direction. For me, it's a good one. Let's quickly look at the Niger Insurance to see a stock that even when as high 30 kobo came down to around that 20 kobo again in the shortest time. Let's see what it's doing. Don't forget that recently we have seen the insurance stocks coming up on the coming up powerfully in this coming up powerfully Niger Insurance. That also, yeah, let's look at what is happening. That will be the last start for us to call it a day for today. I know that the way the market is now, you don't need to Niger is doing 10%, but like I always say that you can't see institutional investor buying this local stock. That means if you are playing this local stock, you have to be very, very careful, and also don't be greedy. And because if you are greedy, you might buy at a good price to come out because you want to make 50%, 100%. Once you're able to take your technical decision and you jump into all this and you're able to make 18 and above percent, if you are this volatile market, I say it's time to celebrate and also quickly jump out of the stock. That is the way to go about the stock market now. You can see here, you can see yourself here that it's trying to make a move. I can see also after doing forming a double bottom here, you can see here, you can see the resistance level. You can watch here, this point and this point, it tested, they are the same. There's no much different here. Look at where it got here and it tested it again and it pulled back. Now it's forming another double bottom trying to go up. Let's see how far it goes. But once you're able to break out here before a new trend can continue, but keep your eyes on the stock. If you are there, Just know that you won't stay there for too long. Don't be carried away of whatever you are making in that stock, but rather take a good position to know when to exit. That is why I said don't play with your entry and exit strategy. It's very, very key when it comes to equity trading or future trading. You need to know how to employ all this to make what effective decision. Yes, quick one. Let me run to this. Let's look at this one before we call it a day. MACD, money flow, and our C line. C line is popular already. Yes, T line is popular already, but we need to check our T line to 8. I already tell you that's what I use. And yeah, you can see that. You can see the T line now. But check here and see where the T line is. T line, and you can see the mark the this stock is still below the T line and also below the what the 20 days moving average. Until break it out for me, it's a confirmation for you to jump in purely, but still below the T line and still below the 20 days. You have to also be very careful. It's not the right time to jump into the stock if you are not there. But for those that want to enter, I would advise you want the stock to break out the T line and the 20 days moving average before you can jump. What seeing here, you can see for yourself. You can see what is forming, and also money flow, so showing that it's still up around the 89, and looking up marginally here on the day chart. Let's quickly look at the 1 hour chart on this stock. Let's see what is showing. You can see on the 1 hour chart what you can see here. You can see that it's almost crossing, becoming a market becoming bullish on our chart, but still on a daily day chart, still not bullish. You need to watch very well. Your money flow is still looking up on our chart, which is also good. Having a good volume here. Volumes above the average traded volume for our chart. Good. That's why finally go to 1 day chart to look at everything together. You can see as we speak now, the volume here is also encouraging, but still not too much. For me, it's not too much. You need to also look at the volume around 2 billion, which is almost close to the average traded volume for the stock, which is for me, it's not a bad one. But I would advise you have to wait for the price action to cross the T line and and the and the before you can jump in if you are not there. Because we are seeing a sign here that, but it depends on market forces. The new week by next week by God grace. Yes, on this note, we close with this Niger insurance. Thank you for staying tuned. For I pray that you enjoy your weekend. At the same time, next week another week. But for those that answer, no, sorry, question to ask, they can join us at the question and answer session exactly by 12 noon tomorrow. Maybe you are free to ask your question. The answer will be given to also boost your confidence and also guide your decision going to the new week and for the rest of the quarter. This is the last month of the quarter. By April, we'll be seeing the beginning of a new quarter. That is why the master class is coming up on the 2nd of April. So you can take position of the quarterly earnings also to stay ahead of the market and then invest wisely. See you tomorrow by 12 noon. Those that are going to join us for the quarter answer session. God bless you and enjoy the rest of your trading day. Bye.